Hello friends, welcome back. I hope you are all doing good. So in our previous class we had discussed about allowances under salary. So now there are only few parts which is left over in our salary topic. One is your provident fund, superannuation fund, and we have your perquisites, and later on the deductions under salary. So there are few points, I think almost 4 points. In perquisites we have a lot of different items which are covered over there. So once we discuss all these 4 components of salary, leftover components of salary, the topic of salary will be over. So in our today's class we will try to cover the concept of provident fund as well as superannuation fund. So provident fund, so we are going to start our discussion on a beautiful fund called as what, sir? Provident fund. Sir, what do you mean by provident fund, sir? Why do we have this provident fund? Do we get any advantage by this provident fund? Are we going to get any benefit if we are putting money in this provident fund? Why is this provident fund forming part of salary? Everything I am going to tell you. I am going to teach you everything. Now, basically first we are going to discuss about what, sir? We are going to start our discussion on provident fund. Now basically provident fund which is there, provident fund which we have, this provident fund is divided into 2 categories. Provident fund is basically divided into 2 categories. One is called as employee provident fund and another one is called as public provident fund. One is EPF, employee provident fund, and another one is PPF, public provident fund. Now since we are discussing the topic of salary, here we are mostly concerned with the employer-employee relationship. So here we are mostly concerned with what topic, sir? We will be majorly discussing about this concept of employee provident fund. So here we will mostly be discussing about what, sir? Employee provident fund, and one more provident fund which we have is public provident fund. Now in this employee provident fund also we have some subcategories. In this employee provident fund also we have some subcategories. We have statutory provident fund, we have recognized provident fund, we have unrecognized provident fund. So these are the different subparts in employee provident fund. Basically for our area of discussion is what? Employee provident fund. In this employee provident fund we have different things called as statutory provident fund, recognized provident fund, unrecognized provident fund, and we also have something called as public provident fund. But yeah, this is something which we are not going to discuss in this particular topic. Yeah, but I'll just give an overview of what is this provident fund, public provident fund, or EPF. Basically both are same. Now what happens is there is a fund which is created. There is a fund which is created. Let us name this fund as provident fund. Okay, there is a fund, there is an account, there is a dabba which is created. Now let us name this dabba as what's a provident fund. Now what happens is in this dabba there is money contributed by employee. In this dabba equal amount of money is also contributed by employer. So whatever contribution employee is making, similar amount of contribution employer is also going to make. So obviously this is an amount, this is a fund in which there are some money which is getting deposited, correct? So this is, assume it like your bank account. Assume it like your bank account wherein you are depositing money and your employer is also depositing money. Now what will happen, sir? If you deposit money in this account, you will obviously get interest. You will get interest on this account. Now there is a contribution which is made by you and there is equal amount of contribution which is made by your employer also. For both of this contribution, interest will be paid by this fund. This fund is going to pay you interest. Now normally, sir, interest, if this fund is paying us only interest, then it is better to deposit in our bank account only, no sir. What is the advantage of putting the money in this provident fund? The advantage is that your interest which you get over here is more than the normal interest which you see in bank. In bank FD, so normally if you have saving account, maybe you will be getting 3 to 4% interest rate. If you have some FD, then you may get say 5 to 6% or 7% interest rate. But in case of provident fund, no, you get an interest of say 8%, you get an interest of say 9%, 9.5%, and if it is recognized provident, if it is an employer owned provident fund, then they give interest up to 12%, 15%, etc. So again, it depends, but government fixes the interest rate for this. If it is a statutory provident fund or public provident fund, the interest rate will be fixed by government. Now whatever money you are contributing over here, this money which is there, that is getting accumulated. Now just see, for example, say there is a person who is working for Priya Sarees. Okay, so there is Mr. Dilip, who is the employer, and there is Mr. SRK, who is an employee of Priya Sarees. Now Shahrukh is getting a salary of 1 lakh rupees. Shahrukh is getting a salary of 1 lakh rupees. Now what will happen, sir? What will happen in case of Shahrukh? Now in case of Shahrukh, what will happen? Say, let us assume that we are making a contribution of 12% in this PF account. We are making some, so salary, in this salary we are making some contribution to PF account. So we are making a contribution of say 12,000 rupees. So this contribution of 12,000 will be made from employee, and similar amount of contribution will also be made by employer. Now there is an almost equal to, please note, employee is putting some amount, 12,000 rupees, and employer is also putting some amount in this particular fund. For this amount will be kept till this person Shahrukh is working for Priya Sarees, the amount will be deposited in this particular account. And if Shahrukh is shifting some other company, or if he joins some other company, then Shahrukh will be contributing, the fund will remain, Shahrukh will be contributing to the fund, and his new employer will also contribute the money to the provident fund. Now after a particular period of time, when Shahrukh feels now it is sufficient, let me retire now, let me not work anymore, etc., Shahrukh quits his job and he retires from his work. At that time, Shahrukh is going to withdraw the money from this account. Shahrukh is going to withdraw the money from his account. Now the advantage which we get over here is, whatever contribution we are making, that is exempt, we can take the benefit. Whatever interest we are earning from this particular fund, that is also exempt, we can take some benefit for that. And at the time of retirement, whatever amount we are getting, no, that is also exempt. So that is the advantage. But in case of your bank account, it is not like that. Whatever amount you are going to deposit in your bank account, it is already taxable, and whatever interest you are going to earn from that bank account, that is also taxable. So lump sum amount, obviously interest is already taxed, so lump sum amount criteria will not be there. So government came with a scheme called as Provident Fund, wherein for the benefit of the government employee, first they had started this particular scheme, Provident Fund. So they had started Statutory Provident Fund. Then later on, the private companies also told that we also want Provident Fund for our employees. So they started something called as RPF, and there are some companies who follow URPF, wherein they have not taken approval from anyone, but they are having their own provident fund. Fund is nothing but this dabba funds which is maintained. Now please note, majorly the provident fund was right from the beginning applicable only for employees. It was right from the beginning applicable only for employees, so we had only EPF. Then later on, normal public also, they also said that, sir, we also want some benefit like this. We are not an government employee, we are not working for any company, we are self-employed, we are having our own business, we also want some kind of benefit like this, we also want some kind of benefit called as PPF, etc. Sir, we also want this kind of benefit. That time, the concept of PPF was introduced, where normal public like you and me, who are not working for any company, who are self-employed, who have their own business, who have their own practicing firm, etc., they can put the money in this particular fund. Then they got the concept of Public Provident Fund. So in Public Provident Fund, I am talking about Public Provident Fund, the amount which can be invested by you starts from 500, minimum investment which you can do is 500, and it can go up to 1.5 lakhs, meaning up to 1.5 lakhs you can take the benefit under 80C. So it is up to 1.5 lakhs. Obviously you can make any more, if you want to contribute some more amount, obviously you can do, but you will get a benefit under section 80C of 1.5 5 lakhs. Now this is a small discussion about provident fund, but yeah, this discussion is not so relevant for us. This discussion is not so relevant for us. What is relevant is what these funds are talking about. What is statutory fund? Now how much will be taxable under salary? Why is it taxable under salary? Is it taxable for all the different cases, or is it not taxable, etc.? That is what we are going to see. So let us start our discussion with the first fund. The first fund is which fund, sir? The first type of fund is statutory provident fund. Statutory provident fund or SPF. First type of fund which we have is what, sir? SPF or statutory provident fund. Now let us create a fund. So please understand this first, then you can make a note of it. So your first motive should be understanding the provision properly, carefully. Let me create a dabba. And let me name this dabba as statutory provident fund, SPF. So there is a dabba which is created by me, and I have named this dabba as what, sir? Statutory provident fund or SPF. Now what will happen, sir? There are two people. There is an employee and there is an employer. So we have employee over here and we have employer over here. Now what happens, sir? There is a contribution which is made by the employee and there is a contribution which will be made in the fund by the employer. So in this particular dabba, there are some deposit. There is some money which will be deposited, or there will be contribution which will be made by whom, sir? Employee. So there will be a contribution by employee. Employee's contribution to EPF. Now employee's contribution to EPF will be there, and obviously there will be some contribution by employer also. Employer is also going to contribute some money. Now what you should keep in mind, sir? Whatever contribution is made by the employee, that contribution you are supposed to ignore for the purpose of computation of salary. Whatever contribution, say I am working for some company, the company has paid me salary, so whatever deposit I am going to make in this particular dabba, whatever contribution I am going to make in this particular dabba will be made from my salary only. So because salary is already taxed in my hands, I am not going to tax this contribution. So this dabba is there. Now I have received the salary. Assuming I have received the salary in one account, I am depositing this that amount in some other account. So what difference does it make? So it is my own money, correct? So you should ignore. If there is an contribution which is made by whom, sir? Employee, that contribution should be ignored, and to his contribution, to whose contribution, to employee's contribution, the employee is going to get a deduction under section 80C. Employee is going to get a deduction under section 80C. Whatever contribution is made by the employee, he can claim a deduction under which section, sir? Under section 80C. Then we have employer's contribution. Employer has contributed some money in this particular fund. For this employer's contribution, to which fund, sir? This statutory provident fund, no tax treatment is required to be done. It is exempt. If money is contributed to statutory provident fund by employer, ignore it. If money is contributed by Employer in this statutory provident fund, exempt. Employee contributes, ignore. Employer contributes, it is exempt. Therefore, whatever contribution is made by the employer, say for example in our case 12,000 was made by employee and 12,000 was made by employer, 12,000 you should ignore it. You should ignore it. Why, sir? Because it is my salary only which I am depositing in that particular account, and the balance 12,000 which is paid by the employer, that is exempt. That is not taxable in your hands. It is not taxable in your hands as salary. Now what will happen? The account is created, the dabba is created. Now interest will be paid by this dabba. So this is an account, so we will get some interest for our contribution. There will be an interest which will be received for employees contribution, and there will be an interest which will be received for employers contribution. So there will be two types of interest. There will be an interest for employees contribution, and there will be an interest for employers contribution. So whatever interest you are getting for your contribution, whatever interest employee is getting for his contribution, from which funds are? From statutory provident fund, it is exempt. So whatever interest an employee is going to get for his own contribution in this statutory provident fund is exempt. It is not taxable, therefore it is completely exempt. You don't have to worry about that. Whatever interest employee is going to get for employer's contribution, employer also has put some money in this, correct? 12,000 is put by the employee. For the 12,000 he is going to get some interest. Employer also has put 12,000 rupees. For the 12,000 also they are going to get some interest. That is also exempt. So contribution, please, I'll repeat. Contribution made by employee to the fund, ignore. Contribution made by the employer to the fund, exempt. Interest accrued on this contribution of employee, exempt. Interest accrued on the contribution of the employer, that is also exempt. Now fund is there, there is money which is available in this fund. There is money which is available in this fund, and this money belongs to whom, sir? This money belongs to employer as well. This money belongs to employee. This complete money. Why is this fund created, sir? For the benefit of employee. Why is this fund created? This fund is created for the benefit of employee, wherein employee himself is contributing some money and the employer also contributes some money. Whatever contribution employee is making, ignore that, because we have already taxed it as his salary. Then whatever contribution is done by the employer, that will not be taxable. It is exempt. Now on this contribution they are going to get an interest. Interest for employees contribution, exempt. Interest for employees contribution is also exempt. Now there are money in this account. What money is there, sir? There is money in this particular account. What money we have? Our contributions and our interest. So accumulated we have some amount which is left over there. We have some amount which is there in this particular account. Now when you retire from the job or whenever you want money, you will withdraw the money from this account. So lump sum amount which is withdrawn by you, normally they withdraw it at the time of retirement only. So you would have seen government employees at the time of retirement, they celebrate, they get huge amount, that huge amount which is nothing but their provident fund. So lump sum amount which you have received, lump sum amount which is received by employee, who is going to get this money, sir? Entire money will be given to employee only on his retirement. Lump sum money which the employee is going to get on his retirement, this lump sum money which is there, this entire full lump sum money is exempt. This full lump sum money will be what, sir? This full lump sum money will be exempt. First I'll repeat again. Whatever contribution is done by the employee, ignore. Whatever contribution is done by the employer, exempt. Then whatever interest you are getting for employees contribution, exempt. Whatever interest you are getting for the employer's contribution, that is also exempt. And lump sum money which you are receiving, at the time when you are retiring from the company, that will also be exempt. Sir, but why will the employee make the contribution, sir? Obviously, why will the employee make contribution, sir? Sir, he is already paying the salary, no, sir. Why will he make contribution to this particular account, sir? This is also a part of your salary only. The salary which you are getting, no, the salary which you are getting, you will get basic pay, dearness allowances, you may get commission, you may get other types of allowances. Just like that, you will get one more component. There is one more component of salary called as provident fund. So this is also forming part of your salary only. It is not that employer is very happy with your work and he is doing some contribution or he is doing some charity work. No. This is also a part of your salary which they are going to deposit in this particular account, which they are depositing in this particular account. Normally they do these types of deposit because you get good amount of interest from this account. Now if you work for in a company which has PF etc., you will also feel very good because even though you are not directly saving any money, there is some money which is saved in your name. You will be putting some money, there will be same amount of money which will be put by the employer. Now interest will accrue in this account, and once you leave the company, you will get a huge amount. So normally these types of contributions are done normally. Obviously it is not that every company follows PF etc., but majorly many companies they follow PF because once if a company is following PF, no, the value of that company increases, and there will be people who is interested to work for that company. I have seen a lot of companies who make contribution to PF or who do not follow PF, and there are a lot of employees who the employee turnover ratio is very high. The lot of employees they join the company, after 3-4 months they leave the company, they take the experience, they leave the company, they join another company where they where they get all this kind of benefit. Normally statutory provident fund, by seeing this particular provision only, you can tell me that it will not be asked in the examination. Sir, why do you say like that, sir? Why do you say that statutory provident fund questions will not be asked in the examination? Because what will they ask? See, your contribution is exempt, interest is exempt, amount which you are receiving, lump sum amount which you are going to receive, that is also exempt. What is the point of asking? When everything is exempt, what will you think? I mean, there is nothing where a student has to understand or think etc. If you know statutory provident fund, everything is exempt. Contribution is exempt, interest is exempt, and lump sum amount is exempt. So a student may not have to use his brain at all. So in examination, what will they ask, sir? They will ask a point wherein you will have to use your brain. Where will I have to use my brain, sir? You will have to use your brain in this. What is this, sir? Recognized provident fund. So next fund, very important fund. Please concentrate properly because this is something which they normally ask in the examination. Recognized provident fund. Recognized provident fund. I will copy the same drawing over here also. Okay, recognized provident fund. Very important. Now, what is this recognized provident fund talking all about? So let us change the name of the fund. Name of the fund is recognized provident fund. RPF. Yeah, so let us see what happens in case of recognized provident fund or RPF. Now in case of recognized provident fund, whatever contribution is made by the employee, it will not be taxable. You should ignore it. Why, sir? Same reason. See, you have already, the salary which you have received is also already taxed. Now your salary, whatever salary you have received, from that only you are depositing some money in this account, so it will not be taxable again. So employees contribution to recognized provident fund, ignore madi. Employees contribution to recognized provident fund, ignore. Sir, what about employers contribution? Employers contribution is exempt. Employer's contribution is exempt. How much is exempt, sir? 12% of salary. Employer's contribution is exempt up to how much, sir? 12% of salary. Employee's contribution he should ignore because he has received the salary. Okay, so now the salary which he has received, from that salary only he is going to deposit the money in this account. He's going to deposit the money in this particular recognized provident fund. So ignore his contribution. Ignore whose contribution? Ignore the contribution made by the employee. Now employer's contribution which is there, employer's contribution will be taxable. It will be taxable if the contribution amount is more than 12% of salary. Employer's contribution will be taxable if his contribution is how much? More than 12% of salary. Sir, what do you mean by salary over here? Oh sir, what do you mean by salary? Salary means same. Salary means what, sir? Salary means basic. Salary means DA in terms. And salary means what, sir? It includes turnover, commission. Salary includes three things: basic plus DA in terms plus turnover commission. Salary means what, sir? Your basic pay plus dearness allowances in terms and turnover commission. Same salary. Mostly salary definition is same under entire salary topic. Majorly this is the definition, not mostly. Majorly this is the definition which we are going to use for a lot of calculation under salary chapter. So basic plus DA in terms plus turnover commission. So your contribution, employer's contribution up to 12% of the salary is exempt. Employer's contribution up to what, sir? Up to 12% is exempt. Employer's contribution up to 12% of salary. So if the employer has contributed 15% of salary, 3% will be taxable. If he has contributed 10% of salary, nothing is taxable. 12% of salary, nothing is taxable. So employee has contributed 20% of salary, sir. No problem. His own money, he can contribute any amount of which he requires. But in case employer contributes more than 12%, then that whatever more than 12% is there, that will be taxable. Sir, what about interest, sir? Sir, what about the interest which is going to be accrued, sir? Is interest also taxable or is interest also exempt, sir? I'll tell you. Sir, please tell no, sir, what happens for this interest? Now, you are going to receive interest for your own contribution. The fund says, hey employee, you are going to receive an interest for your own contribution. So the contribution which is made by the employee, for employee's contribution, the fund is going to pay the interest. So whatever interest is accrued for employee's contribution, that interest is exempt. That interest is exempt. Sir, how much is exempt, sir? Whatever interest you are going to get for your own contribution, that interest is exempt. How much is exempt, sir? Up to 9.5% per annum. The interest is exempt. How much is exempt, sir? Up to 9.5% per annum. So the interest which you are receiving up to 9.5% per annum, interest is exempt. You are understanding? See the interest rate up to 9.5%. Interest can be up to 9.5%, and your interest up to 9.5% is exempt. Sir, and what about employer's contribution? In case of employer's contribution also, interest is exempt. Sir, how much interest is exempt? Same, up to 9.5% per annum. In case of employer's contribution also, whatever contribution is made by employee, see, employee is going to make the contribution to this fund, employer also is going to make the contribution to the fund. Employer's contribution, ignore. Employee's contribution up to 12% of salary is exempt. Employer's contribution, you are going to get interest. That employee's contribution, whatever employee has contributed in this fund, interest up to 9.5% is exempt. And for employer contribution also, interest up to 9.5% is exempt. Then now at the time when the employer is retiring, retiring, then he is going to withdraw the money from this fund, correct? What will happen for that amount, sir? Lump sum amount received by employee at the time of retirement, at the time of his retirement, at the time of his retirement, lump sum amount received by employee at the time of his retirement, that lump sum amount which he has received at his retirement, that lump sum amount will be what, sir? This lump sum amount will be exempt. This lump sum amount will be what, sir? This lump sum amount will be exempt. But there is a condition. This lump sum amount which you are receiving at your retirement will be exempt only if you have done minimum 5 years of service. It will be exempt. Here there is a condition. It will be exempt if minimum 5 years of service. So it will be exempt. When will it be exempt, sir? If minimum for 5 years you have worked for this company, only then the money which you are getting, the lump sum amount which you are getting, from the company at the time of your retirement. So it is not like that you are shifting the company each and every year. You are shifting the company each and every year, you will get whatever amount you are withdrawing, that will be exempt, etc. No. Minimum 5 years you should work for a company. Only then, say for example, I have started working in a company 1. So company 1 I started working, I worked for 3 years. Now this company was depositing the money in PF, and there was my contribution also in PF. Now at the time of retirement I withdrew the money. Is it exempt, sir? Is it exempt? No, it is not exempt. It is taxable. I joined company 2. Here I worked for 6 years. Now here this company also followed this RPF. Now I withdrew the money when I left the company. Now is it exempt? Answer is yes. Sir, I joined company 3. I worked here for 20 years, sir. Now I withdrew at the time of retirement. Now is it exempt, sir? Answer is yes, it is exempt. So what is the condition? Minimum 5 years in service. You should be minimum 5 years in service. You should be minimum 5 years in service. However, there are exceptions. Except in 3 cases. There are 3 exceptions for this, except in 3 cases, meaning in 3 cases this 5 years condition will not be applicable. In 3 scenarios or 3 cases, this 5 years condition which is there, that 5 years condition shall not apply. Sir, what are those 3 different scenarios in which 5 years condition will not apply, sir? The 3 scenarios for which this 5 years condition will not apply is: point number 1, employee is not feeling well, meaning his health is not good, his health is not well, I mean permanently he is not able to work. He is in such a condition wherein, say he was working for the company and his hand broke, etc. Some kind of injury happened to him, because of which he cannot work, because of which what, sir? Because of which he cannot work anymore in that particular company. Then no issues. Or the employee has passed away, or case number 2, the company in which he is working is shut down. The company in which the employee was working, say for example I was working in a company, and that company, after 2 years of my service, that company shut down its operation, the company is no more there. Now in that case also no issues, you don't have any problem, because you have not done something from your side. Okay, you did not want to leave the company, but you don't have any option at all. When the company is only not there, what will you do in the company, correct? Or case number 3, if you are shifting the money from one employee RPF account to another employee's RPF account, or you are shifting the money from one employee's RPF account and putting it to 80 CCD pension scheme. Now first 2 cases is very simple. First 2 cases what, sir? First case is the employee is not feeling well, or he is not there, he passed away. Second case, the company is shut down, the company has shut down his operation. Now third condition says, if you transfer the money which is there, now assuming you're joining some other company, you see over here in this example which we took, the first example which you took, I worked in one company number 1 for 3 years. Now instead of withdrawing the money from this RPF account, if I transfer the money to my RPF account of new company, if I transfer the money to my RPF account of new company, then they are not going to tax it. It will be exempt. Then it will be exempt. They say you have not withdrawn the money at all. Because you have shifted the company, because you have joined a new company, you are also transferring the money which is there in your RPF account to the new company's RPF account. Here it is not a problem. It will be exempt. Or you are transferring the money in 80CCD pension scheme. There is national pension scheme. So if you transfer the fund, instead of withdrawing and keeping it for yourself, if you deposit the money in 80CCD pension scheme also, then also it will be exempt. So in 3 scenarios you get exemption. Scenario number 1, ill health of employee or he is permanently disabled. Scenario number 2, company is shut down. And scenario number 3, the amount is transferred to the RPF account or 80CCD account, RPF account of new employer or 80CCD national pension scheme account. So this is about RPF. Now sir, what is the difference between statutory provident fund and RPF, sir? Normally statutory provident fund is for government employees. Normally all the government employees etc. which you are seeing, we have the concept of statutory provident fund, SPF. So in case of government employees, whatever contribution is made by government, the employer, that is exempt. Whatever contribution is made by the employee, that is also exempt. And the interest which they are getting, that is also exempt. Lump sum amount which they withdraw, which they get at the time of retirement, that is also exempt. But in case of what is this RPF, sir? Then what is the difference between SPF and RPF? Only for government companies we have RPF, SPF. Now if I as an individual, I am Tata Motors, I am Reliance Industries, I am say Infosys. Now I also want my employees to take the benefit of Provident Fund. So for this, lawmakers have told, yes, you can also create a fund. Now this recognized Provident Fund means the fund which is approved by the Commissioner of Income Tax. So you create a fund and you take the approval from the Commissioner of Income Tax. Once you take the approval from the Commissioner of Income Tax, your fund is now recognized, it is now approved. So this is called as recognized provident fund. Statutory provident fund as per the law. Recognized provident fund, the fund for which approval has been taken from the income tax officer. Now I'll write one important note over here, okay, one very beautiful and very important note, which was a recent amendment which was made in the year 2021. So an amendment was made in this particular point in the year 2021. I'll just write that particular note. Apart from that, normal general point also which I feel like writing, I'll write that also. This note is with respect to interest on RPF. Sir, what happens to interest on RPF, sir? What about interest on employer contribution? Employer has contributed the money. Now employer has contributed the money for the money which is contributed by him. The interest will be given by the fund. The interest will be accrued in this particular fund. What will happen to that interest? That interest will be taxable if it is more than 9.5%, and it is taxable as what, sir? Salary. Interest accrued in excess of 9.5% per annum. Interest accrued in excess of 9.5% per annum is taxable in the hands of employee and it is taxable as what? It is taxable as salary. And it is taxable as what, sir? It is taxable as salary. Then I am going to receive interest on my own contribution. If I am an employee, employee is going to receive interest for his own contribution. Interest on employee's contribution, same point. Interest in excess of, or accrued in excess of, interest in excess of 9.5% per annum is taxable in the hands of employee as his salary. See, for employer's contribution, you get exemption up to 9.5% of salary. Anything more than 9.5% of salary is taxable. For employee's contribution, you get an exemption up to 9.5% of salary. Anything more than 9.5% of salary is again taxable. Now I'll talk about this particular amendment which was made. However, if employee's contribution to RPF is more than rupees 2,50,000. If employee's contribution to RPF is how much, sir? More than 2,50,000, then interest, right in next line, then interest on such contribution in excess of rupees 12,50,000 is taxable as salary in his hands. Now there was an amendment which was made. Now please note, we all know that whatever contribution is made by the employee, we should completely ignore. Now what amendment they have got is, what is this amendment telling, sir? The amendment says if the employee contributes money to this fund, okay, and on that money he is going to obviously get interest. For whatever contribution he is going to make, he is obviously going to get interest. Now what they are telling is, if employee has made any contribution to this fund, then that contribution is 100% required to be ignored. But if the contribution amount is more than 2.5 lakhs, if the contribution amount is more than 2.5 lakhs, if the contribution amount is how much? More than 2.5 lakhs, then any interest which is there on that contribution, whether it is 1% also, that will be taxable. See, interest up to 9.5% is normally exempt, but if the contribution to the fund is more than 2.5 lakh, if the contribution is more than what, sir? 2.5 lakh, then the interest which is going to receive for this in this particular fund, that interest will be taxable. In such cases, whatever interest is going to receive, that interest will be taxable. Sir, can you please give an example and explain, sir? Yes, I'll just give an example. Say for example for this point. Now please note, let us assume that employee has contributed to RPF rupees 3,50,000. How much contribution employee has made, sir? Rupees 3,50,000 employee has contributed, and the PF interest is say 6% per annum. 6% per annum is the interest. Now what is the taxable amount over here? What is the taxable amount? What is the salary in the hands of employee? So if I want to answer for this, now please note here the interest rate is less than 9.5%, correct? Now what is this amendment telling? This amendment is telling employees contribution up to 2.5 lakh, no issues. If contribution is more than 2.5 lakh, whatever more contribution is there on that, any amount of interest is taxable. Sir, what do you mean by this? See, his contribution is 3.5 lakhs less 2.5 lakhs. Sir, why sir less 2.5 lakhs? Because up to 2.5 lakhs, no issues. On that extra amount which he has contribution, what is the interest? 6% is the interest. This 6,000 rupees which is there, this 6,000 rupees is taxable as salary. This 6,000 rupees is taxable as what, sir? This 6,000 rupees is taxable as salary. Example number 2. Example number 2, sir. Sir, one more example you give. Explain this properly. Say employee has contributed to RPF 4 lakh rupees. How much contribution employee has made? 4 lakh rupees. And the interest which the PF is giving him, the interest rate for PF is say 14%. 14 is too much actually. So the interest rate is say 12%. Interest rate is how much, sir? 12% per annum. Now what is the taxable interest? In the present case, what is the taxable interest? Now see properly. Now here what is happening? Here we have two problems. Interest rate is more than 9.5% and also there is an excess contribution which is done. So what will be the taxable amount here over here? What will be the taxable amount over here? First, interest computation of salary. So whatever contribution you have done, 4 lakh rupees, that is anyways required to be ignored. Now first I'll take interest in excess of 9.5% per annum. So whatever interest you have got in excess of 9.5% per annum, that will be fully taxable. So what is my contribution? My contribution over here is 4 lakh rupees. On this 4 lakh, how much extra interest I have got? 12 minus 9.5%. So I'll directly write 12% is the interest which I have got, minus 9.5% is 2.5%. So how much does it come to? 4 lakh into 2.5%. It comes to 10,000 rupees. Correct? Because if the interest rate is more than 9.5%, any amount of contribution you have done, that extra interest will obviously be taxable. Now comes the second point or the amendment point. Interest on contribution more than 2.5 lakhs. So whatever contribution you have done more than 2.5 lakhs, whatever contribution you have done more than 2.5 lakhs, on that particular contribution which is there in excess of 2,50,000, whatever contribution you have done more than 2,50,000, that contribution which you have done more than 2.5 lakhs, what will happen to that contribution? Contribution which you have done more than 2.5 lakhs, on that contribution your entire interest will be taxable. So how will I write this? Or else, just a second, okay, I'll make one small change. I'll write this point first. I'll tell you the reason why. So interest on contribution more than 2.5 lakhs. So what is the interest on contribution more than 2.5 lakhs? So contribution more than 2.5 lakhs is 1,50,000 into interest on that 12%, whatever interest is there, fully taxable. 18,000 rupees. Now next point, interest in excess of 9.5%. Interest in excess of 9.5%. Now here interest in excess of 9.5%, instead of 4 lakh I am writing 2.5 lakh. You tell me why. Instead of 4 lakh I am writing 2.5 lakhs. 2.5 lakhs, you tell me why. Tell me in the comment section why, sir. 2.5%. 2.5%, 6,000. Tell me why did I do this particular change. 6,250 rupees. So the total interest comes to 18,000 rupees. 24,250. So this is taxable as salary. Now my question to you is, why did I do this 2.5 lakhs into 2,50,000 into 2.5%? Why did I make this particular change? Why did I make this particular change? Sir, simple sir. See sir, because on 1.5 lakhs you are directly subtracting 12%. That means that extra interest is also taken care over here. On 1.5 lakhs you are multiplying it by what, sir? 1.5 lakhs you are multiplying it by 12%, meaning that extra interest. See, what you are supposed to do over here is, sir, see sir, you can do two things over here. Up to 9.5% interest and more than 9.5% is how much? 2.5%. Up to 9.5% and more than 9.5%. Up to 9.5%, what is the interest, sir? 9.5%. And here more than 9.5% we have 2.5%. For this first 9.5%, up to 2 lakh, nothing should be done. Contribution more than 2 lakh, 1.5 lakhs, I will have to pay 9.5%, correct? 1.5 lakhs contribution which is there, on that 9.5% will be taxable. For whatever contribution is more than 2.5 lakhs, everything fully taxable, fully taxable. For whatever contribution I have made more than 1.5 lakhs, that amount will be fully taxable. Now my interest in excess of 2.5% is taxable for the entire amount, 4 lakhs into 2.5%. So this 4 lakh into 2.5% if I do, how much does it come? So any of the method I can follow, 4 lakh into 2.5%. Here we have 10,000 and 1,50,000 into 9.5%. Here we have 14,250 rupees. If I do the total, we have 24,250 rupees. You can follow any of the method. You can follow, because whatever contribution more than 2.5 lakh is there, on that any amount of interest fully taxable, and up to 9.5% and interest in excess of 9.5% is taxable for my contribution. So here if I follow this method, I hope you are understanding in this method. If not that method, up to 9.5%, for 2.5 lakhs it is anyways exempt. Because sir, why up to 2.5 lakhs it is exempt? Because up to 2.5 lakhs government is telling I don't have any problem. Any contribution more than 2.5 lakhs and then on that interest which is there, that will be taxable as salary. So I have calculated 1.5 lakhs into 1.5 lakhs into 9.5%. Then my interest in excess of 9.5% will be taxable for what full amount of contribution. So my extra interest is how much? 9.5%. My total contribution is how much? 4 lakh into 2.5%, 10,000. So if I do the total, it comes to 24,500. It comes to how much, sir? 24,500. Okay. So I hope this point is very clear to you all. You just look into this point again. I'll just write this exception also once. There are 3 exceptions. What are these 3 exceptions, sir? Ill health or employer business is discontinued or closed and transfer to new employer, RPF or ETCCD pension fund. Have a look into this again. Have a look into this again. So let me just revise this point once. Employees recognized provident fund. Recognized provident fund, important from exam point of view, very important from exam point of view. Any contribution made by the employee, ignore. Any contribution made by the employer more than 12% fully taxable. Interest on employees contribution up to 9.5% exempt. Interest on employer's contribution up to 9.5% exempt. For lump sum amount which you withdraw from this RPF account, it will be taxable if you withdraw within 5 years. It will be exempt if it is withdrawn after 5 years. After 5 years, minimum 5 years of service. However, there are 3 exceptions. Now, what do you mean by salary, sir? For this purpose, salary means basic plus DA plus turnover in commission for computation of the 12% of salary. Interest on employees contribution up to 9.5% is exempt. In excess of 9.5%, it is taxable as salary for employees contribution. Similarly, for employers contribution, interest on employees contribution up to 9.5% is exempt. More than 9.5% is taxable as salary. However, one amendment was made. This amendment says employee can maximum make a contribution of 2.5 lakhs in a year. If he makes any contribution more than 2.5 lakhs, then whatever interest is getting for that extra contribution, that extra interest which is that extra contribution, full interest amount which is there, that will be taxable. It will be taxable. For this we had done just this particular discussion we had done. Just have a look into this. Pause the video, have a look into this. I'll also take a short break. Yeah, so let us continue our discussion. So we were discussing about the provident fund, the taxation of provident fund in case of your salary. So statutory provident fund, first we discussed about statutory provident fund. So the statutory provident fund, whatever contribution is made by employee, that is exempt. Whatever exempt in the sense deduction is given under section 80C. Whatever employer contribution is made is exempt. Whatever interest you get on employee's contribution is exempt, and whatever interest you get on employer's contribution is exempt, and lump sum amount which you receive at the time of your retirement is also exempt. In case of statutory provident fund, everything is exempt. But what is important is this recognized provident fund. What is important is this recognized provident fund. In case of this recognized provident fund, now normally what happens, so this is a recognized provident fund. So this is the fund which is created. So in this fund, the contribution is made by employee as well as employer. Now whatever contribution employee is making, we should ignore that. Why, sir, employee's contribution should be ignored? Because you will get a deduction under section 80C. So while discussing the chapter 6 deductions, you will understand that particular thing, that employee's contribution to provident fund account will be exempt. Recognized provident fund account will be allowed as deduction under section 80C, and whatever employer is contributing for that employer's contribution, there will be an exemption allowed. How much exemption will be allowed, sir? Up to 12% of salary. For employer's contribution, exemption is allowed. How much, sir? Up to 12% of salary. So if any contribution in excess of 12% of salary is made, that will be taxable. Now, sir, what is salary for this purpose? For this purpose, salary is basic plus DA in terms plus turnover commission. So it is basic plus dearness allowances in terms, and it is turnover commission. And now we get interest for the contribution. Whatever contribution employee has made, he will get interest for that. Whatever contribution employer has made, the fund will give interest for that also. Now whatever contribution employee has made, for that whatever interest he is getting up to 9.5%, it is exempt. If the interest rate is up to 9.5% per annum, it is exempt. So if the interest rate is 12%, then it will be taxable. How much will be taxable? That excess amount. How much is the extra amount? 2.5%, that will be taxable. Similarly, interest on employer's contribution is also exempt up to 9.5% per annum. Now the final thing which we get is the amount which we receive at the time of maturity. Now at the time of maturity, the lump sum amount which we get at the time when we are leaving the job, at the time of retirement, etc., the lump sum amount which we get, that will also be exempt. This lump sum amount will be exempt only if it is withdrawn, only if I am into a service in that particular company, for a period more than 5 years. So minimum 5 years in service I should be in service for minimum 5 years. Only then if I withdraw this amount, it will be exempt. However, there are 3 exceptions. If I am leaving the job because of ill health, or because of employer has discontinued the business, or I have left the job and have joined a new company and have transferred the balance which is there in my old employee's PF account to my new employer's Provident Fund account, or recognized Provident Fund account, or 80CCD pension fund. And also we had seen a very important discussion with respect to interest on recognized provident fund. Whatever interest you are getting on employer's contribution, that interest in excess of 9.5% will be taxable as salary, and whatever interest you get in for employees contribution in excess of 9.5% of salary will be taxable as salary. In excess of 9.5% per annum will be taxable as salary. However, on employer's contribution, what they have done is, employer's contribution, they have made some restriction. If an employee's contribution, for this employee's contribution, they have made a restriction. They have told, if an employee contribution an amount more than 2.5 lakh rupees in the recognized provident fund, then whatever interest he is getting on that excess amount which is contributed by him, that interest will be fully taxable as salary. It will be fully taxable as salary. To explain this, beautiful examples also had taken, nice and beautiful examples I had taken. Now let us continue the discussion on the recognized provident fund. There is one more last point which is left over. Recognized provident fund is done. Let us continue the discussion on provident fund. There is one more last point which is left over for our discussion, which is with respect to what, sir? And that discussion is with respect to what, sir? It is with respect to unrecognized provident fund. Unrecognized provident fund, very simple. Unrecognized provident fund, we don't have to worry a lot about unrecognized provident fund. URPF, unrecognized unrecognized provident fund. Which fund is this, sir? Unrecognized provident fund. Unrecognized provident fund is very simple, very beautiful, very easy. Mostly in examination, if a question on PF is asked, then the question will normally be on recognized provident fund. It will normally be on RPF, recognized provident fund. Unrecognized provident fund, what is the provision telling? So let me draw the same thing. Let me take the same example. Now this time the name of the fund will be what, sir? Unrecognized provident fund. Unrecognized provident fund, also called as URPF. Also called as what, sir? URPF. Now, what is this particular point telling? What is this unrecognized provident fund telling? Unrecognized provident fund says whatever contribution is made by the employee, ignore that contribution. Contribution which is made to this fund by the employee, ignore employee's contribution. Whatever contribution is made to this unrecognized provident fund by the employee, ignore, because you are going to get a deduction under section 80C. Sir, why should we ignore, sir? Because whatever contribution you are going to make, it is an amount which you are going to make from your salary only. Salary is already taxed. We are not going to again tax your contribution. And this for this contribution, whichever is made by you, can take the deduction under section 80C. That deduction will be allowed under section 80C. Similarly, whatever contribution is made by employer, that is also exempt. Whatever contribution is made by employer, that is exempt. Interest which you receive on employee's contribution is exempt. Interest which is received on employee's contribution is exempt, and interest which is received on employer's contribution is also exempt. Unrecognized provident fund, we are talking about which fund, sir? Unrecognized provident fund. In unrecognized provident fund, your contributions are exempt, and the interest which is earned on that contribution is also exempt. Whatever contribution is made by you, exempt. Whatever interest you are earning on your contribution is also exempt. However, here the taxability arises at the time when you are withdrawing the money, lump sum amount from this particular fund. At the time when you withdraw the lump sum, whenever you receive the lump sum amount from this unrecognized provident fund at the time of retirement, then this lump sum amount will be divided into 4 categories. This lump sum amount which you receive, it is basically divided into 4 categories. Sir, why sir 4 categories? Array 4 categories is nothing but the amount of contribution which you have done. Your employee has contributed, now that amount he will receive. Employer has contributed, that amount he is going to receive interest on employee's contribution and interest on employer's contribution. So now first is he is going to get the money which is contributed by himself. So at the time when he is going to, at the time of retirement, when he gets the lump sum amount, that lump sum amount will consist of what all different things, and that lump sum amount will consist of employee's own contribution and interest on employee's contribution, and then it will consist of employer's contribution and INTREST, interest on employer's contribution. So it will consist of what, sir? Employee's contribution, interest on employee's contribution, employer's contribution, interest on employer's contribution. Now first amount which I have received is what, sir? Employee's contribution. So the lump sum amount which I receive will consist of my own contribution. So my contribution, my own contribution, because it was already taxed when I received. See, my own contribution, no, my contribution was out of my salary. So that was already taxed when I received my salary. Whatever amount I had received, that was already taxed. That salary amount was already taxed. Now it is like I had received a salary. I had deposited that amount of salary in a particular account. Now I am withdrawing that amount from that account. Say I have received a salary of 20,000 rupees. This 20 out of this 20,000, 10,000 rupees I have deposited in a bank account. Now after 5 years, I am taking this 10,000 rupees from the bank account. Will they tax this amount again? Will this 10,000 amount be taxable again? No, because this 20,000 salary which I have received, no, that was already taxed. So whatever contribution I have made, on that amount I have already paid the taxes in the respective year as and when I have earned the salary income. So here my contribution, employee's contribution will be what, sir? Exempt. Employee's contribution not treated as income. It will not be treated as income. Because it is not treated as income, therefore it will be, therefore you are supposed to ignore it. Now whatever contribution employee has made, on that employee's contribution he is going to receive interest. This interest which he has received shall now be taxable, because at the time when this interest was earned, at the time when the interest was earned on employee's contribution, it was not taxable. Now because it was not taxable at the time when the interest was earned or accrued, now because you are taking out this money, you are withdrawing this money, it will be taxable. And it will be taxable under which head, sir? It will be taxable under income from other sources. This interest will be taxable under income from other sources. So the other part which is left over is employee's contribution and interest on employer's contribution. Employer's contribution, whatever contribution was made by the employer, this contribution of the employer was exempt, and also the interest on employer's contribution was exempt. Now at the time when I am going to withdraw this lump sum amount, I will get interest on employer's contribution and the employer's contribution also. So this both money I am going to get. What will happen to these both money, sir? This both money will now be taxable. It will now be taxable under the head salary. This amount which I have received now, it will now be taxable under the head salary. What will now be taxable? Employer's contribution and interest on employer's contribution, because it was exempt at the time when it was earned. When the contribution was made, employer made the contribution, it was exempt. When the interest was earned, it was exempt. Now that amount will be taxable under the head salary. Now whatever amount you have received, that will be taxable under the head salary. So this is all about your provident fund. This is all about provident fund. So there are totally 3 types of employee provident fund. One is statutory provident fund, recognized provident fund, and unrecognized provident fund. And one more thing which we have is public provident fund. Now let us do some questions with regard to provident fund, so and clear our doubts if any. So here is this question number 1. Obviously what you are supposed to do, sir, you are required to pause the video and solve this question by yourself. You are required to pause the video and solve the question by yourself. I'll read the question for you. Mr. B working, Mr. B working in XYZ Limited has given the details of his income for the previous year 22-23. You are required to compute his gross salary from the details given below. So from the details given over here, you are required to compute his gross salary. Okay. So basic salary they have given 10,000 rupees per month. No issues. They have given 8,000 rupees per month as what, sir? Dearness allowances, and 50% forms part of retirement benefit. Okay. Then they have given turnover commission equal to 0.1%. Then they have said that turnover was 50 lakh rupees. So turnover commission is going to get is 0.1% of 50 lakh rupees. And he has got bonus. Then he has got gratuity. Now please note, gratuity received at the time of retirement will be exempt. Section 1010 exemption is given for gratuity. We have that exemption. No, that exemption will be given if the gratuity is received at the time of retirement. This person is still working, so whatever gratuity is going to get is this gratuity is received during the employment. If the gratuity is received during the employment, it is taxable. And his own contribution to recognized provident fund, his own contribution he has made to recognized provident fund, and employer's contribution to. So his own contribution, what am I supposed to do? I should ignore this. And they have told employer also has contributed some money to recognized provident fund. How much amount he has contributed? 20% of basic salary. Up to 12% of salary in RPF. Employer's contribution up to 12% of salary in recognized provident fund is exempt. But how much he has contributed? 20% of basic salary, not 20% of salary. Salary means basic plus DA in terms plus turnover commission. But here it is only 20% of basic salary. And they have told that interest which they have earned is 13% per annum, which is 13,000 rupees. Interest accrued on this recognized provident fund. Accrued means what, sir? The amount would have the amount is not withdrawn. The amount is not transferred to him in a bank account. It is been accruing in that particular ledger only. Okay. Now you are required to compute what, sir? You are required to compute his gross salary. So let us now start our computation. We are supposed to compute the gross salary. Some basic things which you should know whenever you are solving your income tax questions are, not only income tax, any topic in that matter. If you follow these things, no, your marks which you are going to get will be increased. First, write the name of the assessee, Mr. B, previous year 22-23, assessment year 23-24. Okay, previous year 22-23 and assessment year 23-24. Then write the heading. What are you doing over here? I am computing salary. So computation of gross salary. Computation of gross salary, particulars, rubiage. Particulars and rubiage. What is particulars selling? First point, basic salary. How much is the basic salary? Sir, 10,000 rupees per month. So what will be the amount, sir? 10,000 into 12 months. How much does it come to, sir? 1,20,000. Then we have dearness allowances. Dearness allowances in terms, not in terms, everything is taxable. So I will take total dearness allowance. How much they have given? Dearness allowance 8,000 rupees per month. So 8,000 into 12. 8 12s are 96. 96,000. Then what do we have? Turnover commission. How much is the turnover commission? Sir, they have told 0.1%. So turnover they have given 50 lakh rupees into 0.1% of 50 lakhs. How much does it come to, sir? 0.1% of 50 lakhs is 5,000 rupees turnover commission. Then they have given bonus gratuity. So bonus will also be taxable. Bonus he has received 40,000, fully taxable. Gratuity. How much they have received? 25,000, that is also fully taxable. Then now the point with respect to next 3-4 points are what, sir? With respect to RPF. Last 3 points are with respect to recognized provident fund. So I'll write the heading with respect to provident fund. Provident fund. Now in Provident fund, first item which I am supposed to write is employees contribution. What am I supposed to do? Ignore it. Correct. Then we have what, sir? Employers contribution. How much contribution is made? 20,000 rupees. Inner column I am writing 20,000 rupees. Then less exempt is how much, sir? Exempt is how much? 12% of salary. 12% of salary. So what is salary for this purpose? Basic plus DA in terms plus turnover commission. So basic plus DA in terms plus turnover commission. So working note number 1. Employer's contribution to RPF, exempt amount, is equal to amount exempt is equal to 12% of salary. Now what is salary? Basic pay, which is 1,20,000, plus DA in terms. So I should take 96,000's half, because 50% is in terms. 50% means 48,000, and I should take turnover commission, which is equal to 5,000. So what is the salary? It is 1,73,000. So how much is the exempt amount? 12% of 1,73,000, which is equal to 20,760. So he could have contributed up to 20,760 rupees. How much has he contributed? How much has he contributed? 20% of salary, not 20,000, 20% of salary. Now what is salary, sir? 20% of salary means what? 1,20,000. In short, 1,20,000 into 20%. He has contributed totally 24,000 rupees. It was not, I thought it is 20,000 rupees. So it is 24,000. It is 20%, not 20,000, 20%. So it is how much, sir? 24,000. Subtract exemption. How much exemption he is going to get? 20,760 rupees. So subtract 20,760 rupees. What is the balancing figure? The amount which is taxable comes to 3,240 rupees. How much is the taxable part, sir? 3,240 rupees. 3,240 rupees. Then the next part is interest on recognized provident fund. They have told that he has earned a total interest of 13,000 rupees. Correct? How much interest he has earned? 13,000 rupees is the total interest which he has earned. Now 13,000 is the total interest which he has earned. Now please see this carefully. In respect of interest, please see this carefully. They have told 13% is the interest rate. 13% is the interest rate. 13% is the interest rate, meaning interest in excess of, we all know that interest in excess of 9.5% per annum is taxable. So now they have told the interest which he has earned is 13%, and 13% interest is how much, sir? 13,000 rupees. So 13,000 divided by 13% if I do, then I will come to know what is the total amount on which the interest was paid. I will come to know the total amount on which the interest was paid. Please understand this carefully. Normally, student, what they get confused is, they will compute the interest for this 24,000, the contribution which is made in the current year. No. See, this person may be working from so many years. Now, the accumulated amount, the interest will be given on the accumulated amount which is there in this fund. See, if you are working in a company company for 3 years, then this dabba which is there, no, this box which is there, this fund which is there, this fund will be having amount from last 3-4 years. Now interest will be given every year on that particular amount, correct? So first year if you have deposited 20,000, second year if you first year you will get interest on 20,000, second year if you have deposited 20,000, second year you will get interest on 40,000, third year if you have deposited 20,000, you will get interest on 60,000. so similarly the interest which is given over here is 13,000 rupees. Now what is the amount contributed, sir? If I take 13,000 divided by 13%, I will get the amount contributed. How much is the amount contributed? 1 lakh rupees. Now interest, how much is exempt, sir? 9.5%. so less, I will do what, sir? Subtract the exempt portion. How much is the exempt interest? Exempt interest is 1 lakh into 9.5%, which is equal to 9,500 rupees. So can I say the balance amount which I have received is taxable? 3,500 rupees is taxable. So therefore the gross salary is how much, sir? The gross salary comes to rupees 2,92,740 rupees. The gross salary comes to how much, sir? 2,92,740 rupees. See, please try to solve the question by yourself. Try to solve it by yourself. Obviously you always have an option to see the answer, but that option should because it is an option, you should, it is not compulsion that you should see the answer and then only solve it. No, you try it yourself. When you try it yourself, no, if you are doing any mistake, you will understand that mistake and you will be able to rectify that mistake. Anyways, let us do the next question. Next question is on your computer screen. Come on, India. 1, 2, 3, start. This is the question on your computer screen. Mr. A retires from services on, retires, he has retired, Mr. A retires from the services on 31st December 2022 after completing 25 years of service. Following are the particulars of his income bar investment for the previous year 22-23. Basic pay 16,000 per month. For 9 months he has taken the salary, because he had from 1st April till 31st of December he is going to receive the salary. Then dearness allowance 50% forms part of retirement benefit, 8,000 rupees per month for 9 months, so it is 72,000. Then lump sum amount received from unrecognized provident fund. Unrecognized provident fund. So the amount which was deposited was in which account, sir? Was in unrecognized provident fund. So in case of unrecognized provident fund, your contribution will not be taxable, but the lump sum amount which you get at the time of retirement will be taxable. And deposit which he has made in PPF account is 40,000. You can ignore it. He'll get deduction under section 80C. Out of the amount received from unrecognized provident fund, employer's contribution was 2,20,000, interest was 50,000, employee's contribution was 270 and interest was 60,000. What is the taxable amount of the amount received from unrecognized provident fund? So here this information is actually not relevant, that whatever salary he has received etc., that is not relevant. Mainly the question is with respect to the amount which is withdrawn, the amount which is received at the time of employer's contribution. What is the amount which is what is the taxable portion of the amount withdrawn from unrecognized provident fund? So total amount, so if I do, so total lump sum amount received, so if I write the answer over here, so the answer, lump sum received from URPF is how much, sir? It is rupees 6 lakhs. Now this 6 lakhs is further going to be divided into 4 arrow marks. What are these 4 arrow marks? His own contribution, employee's contribution, then interest on employee's contribution, then we have employer's contribution, and then interest on employer's contribution. So what is the amount? For his own contribution he has received 2,70,000 rupees, and interest on this is rupees 60,000. Employer's contribution is how much? Rupees 2,20,000, and interest on employer's contribution is how much? Rupees 50,000. Now guys, please tell me the answer. What is going to happen in this case? Come on India, what is going to happen in this case? Sir, oh sir, tell me. Oh sir, tell me. Sir, this is exempt, sir. Sir, this is exempt in the sense you should ignore this, sir. Ignore this, sir. Ignore it. Ignore it. Why, sir? Because it was my own contribution. Ignore it. 60,000, can I say it is taxable under income from other sources? Taxable under income from other sources. Can I say employees contribution and interest on employees contribution? Can I say employees contribution and interest on employees employers contribution and interest on employers contribution taxable as salary? Therefore, now how do I answer this, sir? How do I answer this? So how do I answer this? Now here they have not asked you, what is the taxable portion of amount received. Here they have not asked you what is his total income or what is his gross salary. If they would have asked you gross salary details, say if they would have asked you about his gross total income, then what would your answer be, sir? Computation of gross total income, computation of gross total income of Mr. A. Then what would your answer be, sir? Salary, sir. How much is the salary? Income under the head salary. Income under head salary. Now this point, one point you may not understand over here because I have not yet discussed, but if you already know this point, no issues. First, his basic pay, which he has received for how many months? 9 months, which is 1,44,000. Then his dearness allowance, which is 72,000. This is done. Now salary, employer's contribution and interest on employer's contribution. Lump sum from URPF is how much, sir? 2,70,000. So this is the total amount which is taxable under the head salary. How much is taxable, sir? See, they have not asked this particular point, but still I am doing some extra activity so that you can understand that this is how it is required to be done if they ask such kind of question. Then less, so this is your gross salary. This 4,86,000 is what, sir? Gross salary. Less deduction under section 16. Here you will get some standard deduction. We will see this later. There is some section 16 is there where we get deduction. We get flat deduction of 50,000 rupees. So net salary or income from salary is how much, sir? 4,36,000. And then we have one more income from other source. How much is it? 60,000 rupees. So 4,96,000 is GTI or gross total income. Sir, now what is his total income? If someone asks me about the total income, then this 40,000 whatever contribution he has made, no, chapter 6A deduction, some chapter like this is there, chapter 6A deduction 40,000, he'll get deduction. So total income will become 4,56,000, something like this. Okay, Anyways, that point is something which I have not discussed, so let us limit our discussion over here only. Sir, now what should my answer to this question be? Your answer should be only this much. Sir, if I write like this, is it sufficient, sir? No. So see, let us assume that this question will carry 2 marks. This question will carry 2 marks. Now for this point they are going to give 1 mark, and 1 more mark they are going to give for explanation, meaning whatever you have written, just write a line about it. What, sir? What line should I write? You just write this and write a line. The lump sum amount which is received from unrecognized provident fund at the time of retirement shall be taxable in the hands of employee, and some of the amount will be exempt or should be ignored. So the employee's contribution, the amount received as employee's contribution from the unrecognized provident fund at the time of retirement shall be ignored, because it was shall be ignored. That is sufficient. Interest on employee's contribution shall be taxable under the head income from other sources, and the employer's contribution and interest on employer's contribution which is received at the time of retirement shall be taxable under the head salary. So these 4 lines you should write, you will get your full marks. Okay, so the next question is on your computer screen. I want you to solve it by yourself. Very beautiful question, fantastic question. This was an MCQ question which was asked for CA students. Nice question, MCQ question. Please understand this carefully. 2 marks question was asked for MCQ 2 marks question. Sir, give us options. No, sir. No. I am not going to give any options. Solve it. So there is Mr. Gube. Mr. Gube completed his CA in April 2022 and joined XYZ Limited from 1st of May 2025. So date of joining is very important. His basic salary is 2,25,000 per month. He is paid 12% of basic pay as dearness allowances, which is forming part of retirement. Okay. He contributed 11% of his pay and DA towards 11% of basic pay plus dearness allowances was contributed towards recognized provident fund, and the company contributes the same amount. Company also contributed the similar amount. Accumulated interest in the provident fund as on 31st March 2023 was 49,325. So the interest which they got from this particular contribution was accumulated interest during the year end was 49,325. Now they have not given the interest rate also. What would be the income chargeable under the head salary of Mr. Gube for assessment year 23-24 if he does not opt for 115 BSc? So you are required to tell what is his salary. Please solve it. It's fantastic question, must question. You'll enjoy this question. If you solve it properly, then it is a boon. It's very nice and beautiful question. Seriously, I'm telling you. Try it yourself. Pause the video, try it yourself. Pause the video and try it yourself. Guys, pause the video and try it yourself. Okay. Let me do it now. Answer to this question. Mr. Gube, I don't know, I mean he completed his CA in the April 2022 and he got the job also, and he got job offer. His monthly salary is 2,25,000. Fresh CA getting salary of 2,25,000 per month, meaning what, sir? His annual package is how much? Into 12, 27 lakhs. His annual package is 27 lakhs. Sir, is it achievable? Do people get this salary, sir? Yeah, obviously some people get. I mean, you see, please note, it is not based on your rank. Normally, yes, rank holders get good packages, but it is not purely depending upon your rank that you are going to get a very fantastic package. It also depends on your interview, the way you answer the question in the interview, your knowledge, etc. Mr. Gube, particulars, computation of gross salary. I'll just compute the gross salary over here. So they have told income under the head salary, that is nothing but net salary. I'll do the actual amount. Computation of income from salary. Particulars rupees. Particulars. First point, his basic pay. Basic pay is how much? Basic pay, sir. Oh sir, basic pay. Basic pay. What is the basic pay? Sir, basic pay is very simple, sir. 2,25,000 into how many months? Sir, 11 months, sir. Why 11 months? Sir, he joined the company on 1st of May. So from 1st of May till 31st of December, he is going to get the salary. So how much, sir? Sir, it comes to 24,75,000. Then dearness allowance. How much dearness allowance he is going to get? Sir, dearness allowance is 12% of basic pay. So which is 24,75,000 into 12% equal to how much, sir? 2,97,000. Then now comes your recognized provident fund. So provident fund, I'll write the heading as provident fund, and it is a RPF account. So here first we should write employees contribution. Just ignore it. Employer's contribution. How much employer has contributed? Same amount he has contributed. So 2,75,000 plus 24,75,000 plus 2,97,000 comes to 27,72,000 into 0.11%. So the contribution which is made by them is 3,04,920 rupees. So the contribution which is made, see, contribution up to 12% of salary is exempt. 12% of salary means 12% of basic plus DA plus turnover commission. Now the contribution which they have made is basic plus DA only, 11% of basic plus DA. So his entire contribution, can I say it is exempt? Because the contribution which is made over here, employer's contribution, the entire amount will be exempt, because the amount which is contribution is equal to 11% of salary. See, here they have made contribution of 11%. Of what amount? 11% of basic plus DA. So 11% of basic plus DA means what, sir? Your basic amount 24.75 lakhs plus 2.97 lakhs into 11%. Now 12% of this amount is exempt. 24.75 lakhs plus 2.97 lakhs into 12%, up to that it is exempt, but he has made a less contribution only, so entire amount will be exempt. Now comes your interest part, point number 3. This interest part is an interesting point. This interest part is an interesting part. Let us see what this interest part says. Interest on employer's contribution, and he has received what, sir? Interest on his own contribution, employee's contribution. Now the beauty is with respect to interest, and very, very important note number 1. Interest bifurcation. Now in the present question, if you see this, they have told that 49,325 is the interest. Now they have not told on what amount it is the interest. Therefore, obviously this interest will be the amount which is contributed by him on the amount contributed by him. Nice. No sir, in last case you said that the interest is on to the 1 lakh rupees, which may be from past years also. Yeah, correct. But this, in this question they say that he joined the company the current year only, so this is the first year of his service. Correct, this is the first year of his service. This entire interest amount will be on the amount contributed by him. So the total interest is how much? The total interest over here is how much, sir? The total interest comes to 4,49,325. Now can I say this 49,325 is for his own contribution as well as the employer's contribution? It is for employee's contribution as well as employer's contribution. Yes sir. Now sir, how much interest should we give? Since they have told the amount which is contributed by them is same, company also contributed the same amount, meaning the contribution is equal. So because the contribution is equal, can I say this interest will also be equally divided between both of them? So divided by 50% will be given to him. 50% of the interest will be in respect of employee's contribution, and 50% of the interest will be in respect of employer's contribution. 50% of this and 50% of this. What is 50%, sir? 24,662.50 and 24,662.50. Now we should see what is the rate of interest. See, they have not given the rate of interest. They have not given the rate of interest in the question. Now, up to 9.5% of salary, up to 9.5% per annum, the interest is exempt. Now, they have not given the rate of interest. So, what will I have to do? I will have to see the rate of interest. Now, what is the rate of interest, sir? The rate of interest is equal to your contribution. The interest which you have received divided by your contribution. What is the contribution made by you? 3,04,920 rupees into 100. So the rate of interest is what, sir? It comes to 8.09%. Correct? How much is the interest, sir? Rate of interest is 8.09%. Sir, interest rate is only 8.09%. Sir, interest rate is less than 9.5%, sir. Whoa, sir. Whoa, sir. Therefore, can I say interest is less than 9.5% per annum? Array, what is the rate of interest? It is 8.09% per annum. So can I say the interest is less than 9.5% annum? Yes sir, the interest is less than 9.5% per annum. Now see the beauty. Can I say the interest is less than 9.5% per annum? Yes sir. Can I say the interest is less than 9.5% per annum? Yes sir. Now see this. Now see the beauty. See the beauty. 2,24,662.50 less exempt amount. Note 1, fully exempt. $24,662.50 fully exempt. So contribution 0, interest on employer's contribution also 0. Now see this carefully. Now comes the beauty. What is the amount contributed by employer? 3,04,920. What is the amount contributed by employee? Sir, same amount, sir, 3,04,920 rupees. Now, if you remember one beautiful note I had written in this yellow post-it. I had written a beautiful note in this yellow post-it. What is this note telling, sir? This note says, if any amount in excess of 2,50,000 is contributed, if any amount up to in excess of 2,50,000 is contributed, then for that excess amount, if any amount in excess of rupees 2,50,000 is contributed, then whatever interest is earned on that excess amount, fully it is taxable. Whatever interest is earned on that excess amount is fully taxable. Now can I say my contribution over here, employees contribution over here is how much? Employees contribution over here is 4,920 rupees less up to 2,50,000, whatever amount of interest is there, up to 9.5% is exempt. Now here the interest rate is less than 9.5% only, therefore it should be fully exempt. Up to 2,50,000, whatever interest is getting for amount more than 2,50,000, that entire interest amount will be taxable. This entire interest amount will be what, sir? Taxable. So this entire interest amount comes to how much, sir? It comes to 4,443 rupees. Point dot dot something, some amount will come. Point dot dot. Arey, did you understand this point? Sir, no sir, little confusing. What confusion, man? See, up to 2.5 lakhs, employee can make the contribution, no issues. But if he makes any contribution in excess of 2.5 lakhs, then what will happen? Whatever interest he is earning on that extra contribution which is made by him, entire full interest will be taxable. So how much is the amount which is coming, sir? Taxable amount, gross salary comes to 27,76,443 rupees. 443 rupees. Obviously this 443, because of points, maybe your answer would have been wrong. Maybe you would have taken 8.09 dot 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 something. So there may be variation in answer with respect to point. Obviously that is possible. Since interest is less than 9.5% is exempt. Therefore it is exempt. I hope you have understood this question. Very nice, fantastic question. Nice, beautiful, fantastic question. It was an MCQ question asked only for 2 marks. Look at this. Look at this working. Look at this working. Do you think you would have answered this question in 5 minutes? See, 2 marks. Spending 5 minutes for 2 marks is too much. Obviously, if you know the provision, it will hardly take time. Now, I have framed a question by myself covering the different aspects which we learned in this RPF, Recognized Provident Fund. So I have made this question myself. You please see this question. Not only see, you please solve this question. Any person who is going to solve this question and going to send me an answer without obviously seeing the answer, any person who is going to solve this, you will not find this answer anywhere else apart from this particular lecture over here. So any person who is going to send this answer to me by solving it, please send your answer to me. Without seeing, you should solve and send the answer to me. You are going to get a chocolate. You are going to get a chocolate. But yeah, you should be truthful to yourself. You should be truthful to yourself. You should make sure that you are solving this question without seeing it. Meaning, my answer, without seeing this answer, you are required to solve it. So this is the question. I'll read the question. Mr. Dilip, you can send me a message on WhatsApp that, sir, I have solved it without seeing, sir, 9/6/2002 2004. So the first person who is going to send me the answer, right answer, is going to get a chocolate. He is going to get a chocolate. Obviously, you will have to let me know. I'll accordingly arrange for some chocolate for you. You may be anywhere in India. Mr. Dilip joined Tata Motors on 1st April 2022 after completion of his professional education. See, same. I copied the question, linkage. Following are the details of his income for the previous year 22-23. You are required to compute his gross salary. Okay, basic pay is 1,50,000. Dearness allowance is 80% of basic pay. Dilip's contribution to Recognized Provident Fund is 15% of basic pay plus DA, and interest on interest on contribution is 12% per annum. And how much interest they are getting for this? 12% per annum. Employer has made similar contribution as that of Mr. Dilip, meaning Dilip and employer has made the same contribution. 40% of the DA forms part of retirement benefit. 40% of the DA forms part of retirement benefit. Now you are required to do what, sir? You are required to compute the salary. Now you are required to compute the gross salary. Come on, India. Come on, India. Come on, India. Come on, India. Now I will not solve the question. I'll just paste the answer over here. I have already solved it. I'll just paste the answer over here. So accordingly, you can check it. Obviously, you will not get any doubt. You will not get any doubt. You please solve it. You please solve it. You please solve it. I will give you 5 minutes of time. I will give you 5 or 2-3 minutes of time. You can please solve it right away. Please solve it right away. Please solve it right away. I am waiting for your answer. Right away you should solve it. Come on, India. Pum 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 pum. Interest which he has received is 12% per annum. 4,80,000 into 12%. I hope you would have solved the answer. Now you can match your answer with this question. Look at the answer. So if you, I'll just explain the answer to you. So basic salary is 1,50,000 into 12, so 18 lakh rupees, and dearness allowances is 14,40,000 rupees. Then now provident fund comes over here. Employees contribution, you should anyways ignore it. Then employers contribution, basic plus DA into 15%. Basic amount is 18 lakh, DA is 14.4 lakhs into 15% is 4,86,000 is his contribution. Exempt amount will be 12% of salary. Salary is basic plus DA in terms. So here if you see, I have taken basic plus DA in terms. DA in terms is how much? DA in terms is only 40%. So 40% of 14.4 lakhs plus 18 lakhs into 12%. The amount which is exempt will be 2,85,120 rupees. Then interest on employers contribution. Interest on employers contribution in excess of 9.5%. In excess of 9.5% will be taxable. So total interest received is 58,320. Sir, how did I get 58,320? Contribution is 4,86,000 into 12% is the total interest which I have received. So I have received an interest of 58,320 less up to 9.5% interest will be exempt. 46,170 is exempt, so balance amount will be taxable. Then employees contribution. If you have done any mistake, then most probably your mistake would have been in this particular stage. Interest on employees contribution, amount received is 4 lakh. How much interest you will receive? Same amount, 58,320, that is 4,80,000 into 12%. Now here up to 2.5 lakhs your contribution, up to 2.5 lakhs of your contribution, whatever interest you are getting up to 9.5%, it is exempt. Whatever contribution is done in excess of 2.5 lakhs, all the full amount of interest is exempt. Full amount of interest is exempt. So in short, can I say the interest which exemption of interest which you are going to get will be only your 2.5 lakhs into 9.5%. See, interest in excess of 9.5% is taxable, fully taxable, and up to 2.5 lakhs, contribution above 2.5 lakhs, fully it is taxable, full amount is taxable. So can I straight away subtract only the contribution up to 2.5 lakhs and interest on that equal to 9.5%, because on this 2.5 lakhs also, in excess of 9.5%, whatever amount was there, it was fully taxable. So the net amount comes to 34,570. So the gross salary over here come to 34,87,600 rupees. You check this again. Please refer that above provision. You will understand this point. Refer the above provision. You will understand the point. Refer the above provision. You will understand this point. Now, one more small discussion I'll do. This, I think this is a very long video with respect to PF and only with respect to PF I have done a 2-hour video. So one more small discussion with respect to statutory superannuation fund. It is very simple, statutory provident fund. If you have understood or recognized provident fund, then the superannuation fund is very simple. So next point is with respect to what, sir? Superannuation fund. Now, just like your provident fund, the employer may also make contribution to this fund called as superannuation fund. The superannuation fund may be of 2 types. It can be approved superannuation fund, or it can be unapproved superannuation fund. It can be either approved superannuation fund or it can be unapproved superannuation fund. Now here, the beauty of this superannuation fund is, if it is an approved superannuation fund, it is similar to statutory provident fund. If it is an unapproved superannuation fund, the taxability is similar to unrecognized provident fund. Sir, repeat, sir. If it is which kind of fund? If it is an approved superannuation fund, the taxability of approved superannuation fund is similar to what? Just a second. Yeah. So the taxability of approved superannuation fund is similar to your statutory provident fund. In case of statutory provident fund, employee's contribution, whatever contribution was made by employee, we would have ignored it. Employer's contribution up to employee's contribution is also required to be ignored, but here they have told employee's contribution is exempt. It is completely exempt. Just like your statutory provident fund, it is exempt, but here they have given a limit that it is exempt only up to 7.5 lakhs. Then interest which you get on employee's contribution as well as employer's contribution, both are exempt, and the lump sum which you withdraw which you get at the time of retirement, that is also exempt. Here what is required to be seen? Approved superannuation fund is similar to what? Statutory provident fund. Statutory provident fund, employee's contribution ignore, interest on employer's contribution exempt, employer's contribution exempt. In case of statutory provident fund, interest on employer's contribution was also exempt, but here they have told employer's contribution is exempt up to 7.5 lakhs per annum. How much exemption you are going to get? 7.5 lakhs is the limit, and whatever amount is interest is there, that entire interest will be exempt, and lump sum which you receive at the time of retirement, that also is fully exempt. Now then comes the point with respect to unapproved superannuation fund. It is similar to what, sir? Unapproved superannuation fund is similar to your unrecognized provident fund. Sir, what is this unapproved or unrecognized? What did we learn in unrecognized provident fund? That employee's contribution ignore, employer's contribution exempt, interest on employer's contribution exempt, interest on employee's contribution exempt, lump sum amount received will consist of employee's contribution ignore because not an income, interest on employee's contribution taxable under income from other sources, and employer's contribution and interest on employer's contribution is taxable under which head, sir? Salary. It is taxable under salary. It is taxable under salary. So this is with respect to this fund. Approved and unapproved superannuation fund. Simple fund, simple fund. Now here there is one more point, okay, with respect to pension scheme that we'll discuss with our pension scheme under section 80 CCD. This pension scheme under section 80 CCD, no, this I am going to discuss. I'll do one thing. Pension scheme under 80 CCD I'll discuss in my next video. I'll discuss this in my next video. So next video you are going to see, in my next class we are going to discuss about 80 CCD, and we are also see that deductions under the head salary. Then we'll start our discussion on perquisites. So that is all for the day. So I hope you have enjoyed learning this particular concept of provident fund and superannuation fund. Superannuation fund is very simple. Recognize provident fund is something which is important from exam point of view. So in our next video we are going to discuss with respect to pension scheme under 80 CCD, and we'll see what are the different topics which you are going to learn. Okay, let us meet in our next class. Till then, tada, bye bye, take care. I hope you are enjoying the videos. Let us meet. Please give your feedbacks with respect to classes. If you have any suggestions which you want to put, then please give that suggestions also, and any area of improvement I'll definitely improve. Bye bye.